Hi friends, welcome to EduTap. Today we are going to discuss some important MCQs on the financial statements of the company. Now a company, it is a legal entity and it is under legal obligation to disclose all the important financial information through preparation of financial statements. Now, after today's discussion, I can assure you that you will be able to look at the financial statements of any company and you would be able to get a basic idea of what those financial statements they are trying to say. The financial statements of the company, they are trying to say many things, but they are not saying it directly. Rather, they are saying it indirectly. So let's try to understand what are the financial statements and what kind of information you would find in the financial statements of the company. So let's start today's discussion. So friends, let's start our today's discussion with the first question, which is not the component of financial statements of a company. Balance sheet, income statement, cash flow statement, fund flow statement, none of the above is true. So this is a very simple, very straightforward question about the financial statements of a company. Now, one thing that you have to notice here that the question is asking which is not the component of the financial statement. Sometimes we skip this particular word, we skip this word not, and we will answer this question incorrectly. So we have to be very careful about reading the question first very carefully to identify what we are exactly being asked in the question. So friends, let's try to understand what are the financial statements of a company. Now, financial statements, they are going to be the basic statements which are going to contain certain financial information about the company. Now, this financial information is going to be about the income that the company is generating, about the sales the company has made, the revenue the company has generated, the expenses that the company is incurring, the assets that the company has, the liability that the company has. So all the important financial information is going to be depicted through the financial statements. We already know that this financial information is going to be very useful for different users of accounting. So they may be investors, they may be tax authorities, they may be government, they may be even the employees of the company. Now we depict this financial information through different kinds of financial statements. Now the first and foremost, the primary financial statement which is prepared by the company is balance sheet. Now this balance sheet is also referred to as the position statement. So balance sheet is going to depict the financial position of the company, and that's why it is also referred to as the position statement. Now next is statement of profit and loss. Now this statement of profit and loss is referred to as the income statement of the company. This is going to show how much the income has been generated by the company during the previous year. And again, another statement is prepared along with. This is cash flow statement. This shows the inflows and outflows of the cash during the year. How much cash has been received by the company from different sources and how the company has utilized this particular cash on different aspects. So this is going to be depicted by the cash flow statement. So here is a snapshot of the different financial statements of the company. So first one is the balance sheet. Now this balance sheet, अगर सीधी भाषा में बताऊं तो it shows हैसियत of the company. कंपनी की क्या हैसियत है, कंपनी की क्या औकात है. It is going to show the assets and liabilities of the company. कि कंपनी के पास किन चीजों पे हक है, किन चीजों पे right है, they are going to be depicted by the balance sheet. So these assets, they are going to be those things which are owned by the company, which are under the control of the company. So company's cash, company's furniture, company's land and building, everything is going to be shown in the assets. And then there are the liabilities, and again equity or the capital of the company is also disclosed in the balance sheet. So what are the obligations of the company? Company may have to repay certain amount to some creditors. Company may have taken some debt. Company may have incurred some other liabilities. Also company is going to have some capital as well. It is going to have share capital which the equity shareholders of the company have contributed. So all these aspects, they are going to be depicted on the liabilities and equity column of the balance sheet. So this was about the balance sheet, the position statement. Now let's move on to the statement of profit and loss. Now this statement is going to show the income and the expenses of the company. We are going to see how much income has been generated by the company. We are going to see how much revenue is received from different sources, how much revenue is received from selling of different products and providing of different services, and how much expenditure has been incurred on different aspects, how much expenditure has been incurred on salaries, how much interest has been paid. So all these aspects, they are going to be covered on the expenses side. And ultimately the difference between the income and the expenses, difference between the revenue and the expenses is going to be your profit or loss during the year. So this is what is depicted by the statement of profit and loss or the income statement. Then is the cash flow statement. Now this cash flow statement is primarily divided into three parts. It shows how much the cash has been generated by the company from its core operations. This is the operating cash flow. Then is investing cash flow. How much cash has been generated by the company through the different investing operations. How much cash is invested in new land and building purchased by the company. So all the investments made are going to be shown here. And then is financing cash flow. How the company has obtained new finances. It may have obtained it may have issued new shares. It may have got a new debt from the bank. So all these are financing cash flows and they are shown separately. And all these are aggregated to know the net cash flow of the company during the year. So this is basically a statement showing how the cash has moved in and out of the company. So guys, now we can easily answer this question. That out of the following, the balance sheet, income statement and cash flow statement, they are definitely financial statements of a company. Fund flow statement is not a financial statement of the company which is to be prepared and which is to be disclosed separately in the annual report of the company. It may be prepared by the company, but it is generally not prepared, generally not shown along with the financial statements of the company. So the appropriate answer is going to be option number D. Now let's move on to the next question. So the question is, every company registered under the Companies Act 2013. So this Companies Act 2013, it is the law which governs how the companies they are going to incorporate, how the companies they are going to operate, how the companies are going to wind up. So it says that every company which is registered under this law shall prepare its balance sheet, statement of profit and loss and notes to account thereto in accordance with the manner prescribed in the revised dash to the Companies Act 2013. Now whenever we talk about any statute, any law, there are always certain schedules at the end of the law which talk about different aspects, different formats of the different requirements which have been made out under the law. For example, the Companies Act 2013, it puts in the requirement that a company has to prepare its balance sheet, it has to prepare its statement of profit and loss, and it also says I have given the pro forma also, I have given the format also in one of the schedules. We are being asked what is the name of the schedule, what is the number of the schedule in which this format of the balance sheet and profit and loss statement is included under the Companies Act 2013. Is it schedule 1? Is it schedule 2? Is it schedule 3? Or is it schedule 4 or none of the above? Now this is a very important question from examination perspective. So let's unveil the suspense here. Schedule 3 is the one which contains the formats of the balance sheet and the statement of profit and loss which is to be prepared by the company. Now here is the format of the balance sheet as per schedule 3. So you can see that this balance sheet, it contains 1, equity and liabilities, 2, assets. So assets and equity and liabilities, they are going to be contained in this balance sheet. It's not going to be like that. If the format is given in the company law, it is going to be very different than the general format. It's not like that. The formats they have been given just to systemize the entire process, to make sure that every company follows this particular format and every investor can easily compare the financials of every company. So this is why the formats have been standardized for the companies. So it says equity and liabilities, and this equity and liabilities is going to contain the shareholders funds, that is the share capital or some profits which are accrued to the shareholders. They may be in the form of reserves or surplus, and it also includes non-current liabilities, the long-term liabilities of the company. It includes current liabilities, the short-term liabilities, short-term obligations of the company. And when we talk about the asset side, here we have non-current assets and current assets. Non-current assets, simply they are going to be long-term assets of the company, and current assets, they are the short-term assets of the company which are going to be converted into cash in a very small amount of time. So we did not go into each and every item into detail as of now. We just need to know that this format is as per schedule 3. It has two main parts, equity and liabilities, and the second is the assets part. And what are the major headings in each of these parts? What are the major headings in these parts that you have to remember? So friends, here is a format of statement of profit and loss as per schedule 3 of the Companies Act 2013. So you can see it mentions statement of profit and loss for the year ended So we already know that this profit and loss statement is prepared for a particular financial year and balance sheet is prepared as on a particular date. So what it is going to show, we already know that the statement of profit and loss is going to show two main things. One is the revenue of the company and other one is the expenses of the company, and the difference between the two is going to be the profit or loss. So here also this has been depicted. The format has been systemized and you may find certain items which you might not be aware about. So let's skip them for now. Let's try to understand the core of this particular statement. So first and foremost, you can see the revenue from operations, the income that the company is generating are being mentioned. So first we are talking about the revenue that the company has generated. Suppose the company has generated a revenue of 100 crores. Then it talks about the expenses that the company has incurred. Expenses may be incurred on buying stock, buying material for the purpose of reselling, buying material for some manufacturing work and preparing some finished goods. It may be with regard to the salaries of the employee which have been paid. It has been referred to as the employee benefit expense. It may be in the form of interest that has been paid. It is finance cost to the company. It may be in the form of depreciation. It may be in the form of wear and tear of the assets that the company possesses. So every asset that the company possesses is going to depreciate every year. So if you bought a car worth rupees 5 lakh, after every year its value is going to come down. So the value which is coming down, the amount by which the value of the car is decreasing every year is going to be the depreciation if we talk about in respect of accounting. So all these expenses, they are going to be recorded. So suppose the total of all these expenses come out to 90 crore. Now, what is going to be the profit of the company? The profit is going to be 10 crore. Some other adjustments they are there. Let's skip them for now. Let's try to understand what is the core of this statement of profit and loss and where is this format contained in the Companies Act 2013. So now we can easily answer this question that the Schedule 3 to the Companies Act 2013, it contains the formats of balance sheet, profit and loss and notes to accounts which are to be prepared. So answer here is going to be option number C. So now let's move on to the next question. Which of the following asset is classified as current asset while preparing financial statements of the company? So friends, we have already seen that the balance sheet of the company, it contains number 1, equity and liabilities. Number 2, it contains assets of the company. We have already seen that even in the asset side, there were one non-current assets and there were another current assets. So two kinds of assets they were there. So I believe we are already aware how the financial statements look like, what kind of information is depicted in the financial statements. So you have to try for the next questions that you try to answer it yourself first before getting to know the right answer from the slide. So here we are being given the options which are inventories, cash in hand, motor vehicle, bill receivable or none of the above. So now we are already aware that the assets of the company are shown in the balance sheet as non-current assets and current assets. So what is the difference between the two? Now the non-current assets, they are the long-term assets of the company. Primarily they would include the fixed assets of the company which are held for long-term usage by the company. Suppose the company has bought a new machinery, company has bought a new car, company has bought new furniture, company has bought a new building. So all these, they are non-current assets. They are rather fixed assets of the company which are going to be there for the company for a very long time. Company is not going to convert them into cash within a very short span of time, say around 1 year. Now current assets, they are those assets which are assets for the current term only. They are assets only for a period of approximately 1 year or 12 months. Within this particular period, we are going to convert these assets into cash. For example, we have some stock with us. We have stock of say iPhone with us. Now we are going to sell these iPhones in the coming year itself. There is no use selling iPhones after 2 years, 3 years because the demand is not going to be there for the old models. So this stock that we are having is going to be liquidated, is going to be sold within 1 year itself. So it's a major current asset that we are going to have. So there are other current assets as well. For example, we sold some goods, we sold some iPhone on credit. We are going to receive the money for that phone after 30 days. So now this becomes a trade receivable for us. We have to receive the money after 30 days. So this trade receivable is going to give us cash within a period of 1 year. So it again is a current asset. Now cash again itself is a current asset. Cash is cash only. It is going to be current asset. We have made some short-term investment. We have made some investments for a period of 1 month, 3 months, 6 months. So it again is a current asset. We have put money in the bank. Now this money in the bank is again a current asset. Anytime you can convert this money into cash. So all these, they are example of current assets. So it says that current assets are the one the company expects to convert to cash or use in the business within 1 year of the balance sheet date. So cash, accounts receivable, inventory means your stock. So all these, they are the examples of current assets. Non-current or long-term assets, they are the ones which the company will hold for at least 1 year. Examples are going to be property, plant, equipment that the company is having. So these are going to be there for the very long run. They are going to be there till the company is functioning. So they are the non-current assets for the company. So I believe now we can easily answer this particular question. So now we can easily answer that motor vehicle is not a current asset for the company. Inventory, stock is the current asset. Cash in hand is a current asset. Bills receivable is just another name for trade receivable. It's just another name for your debtors from whom you have to receive the amount within a very short span of time. So everything is going to be current except the motor vehicle. The motor vehicle which is going to be there with you, it is going to be for a very long period of time. So answer is going to be option number C. So next question is, Mr. A is looking at the expenses column of the statement of profit and loss of AZ Limited for the year ended 31st March 2021. Which of the following item he would not encounter in the expenses column in the financial statements? So what he is doing, he has picked up the financial statements of the company and he came across the statement of profit and loss. So now he is looking at the expenses column in this particular statement. Now which item he is not going to find here? Which of the following item he is not going to find here? Purchase of stock in trade, employee benefit, finance cost, depreciation, or capital work in progress. So just apply your mind and try to answer this particular question. So let's try to answer this particular question by reading this explanation first. So we already know that the income statement, the statement of profit and loss, we write it as SPL. Now this particular statement, it is going to depict the revenue and the expenses of the company. So you already know the meaning of the expenses. You already know what are expenses. Okay. So now what is going to be your expense? You purchase some stock in trade for the business. You purchase some goods for the purpose of reselling them. I'm buying mobile phones for the purpose of reselling them. This is going to be my expenses. This is definitely my expense. Then it's finance cost. I have taken a loan from bank and I regularly pay interest on it. Now this interest is again expense for my business. Now there is depreciation as well. I have bought some furniture. Its value declines every year. So this decline is shown by me as depreciation in my books of accounts. It is booked as an expense in my books of accounts. Then is employee benefit expense. Now I am paying some salaries to employees. I am spending something on staff welfare. So everything is going to be shown in employee benefit expenses. So these four items, they are definitely going to be there on the expenses side. Now we are left with another item, which is capital work in progress. Now if you looked at the format of the balance sheet very carefully, the format that I showed to you of the balance sheet, you would have seen that this capital work in progress is an item which you can see on the asset side of the company on the non-current, under the non-current assets heading of the company. So balance sheet, it contains assets, it contains liabilities, and in the assets we have non-current assets, we have some current assets as well. Now these non-current assets, they are the long-term assets. Now this capital work in progress, it is also a kind of a long-term asset. So suppose we have started construction of a new building. Now this construction of a building may take around 2 to 3 years. The building may be completed in 2 to 3 years time. So this particular building is still in progress. Now the work on the building is still in progress. So we are going to show it in our balance sheet as capital work in progress. So this is a sort of an asset item under the balance sheet. So this is not going to be included in your profit and loss statement. So the answer clearly is going to be option number E, capital work in progress. So some capital work in progress, some building is in progress. It is not going to be shown in the statement of profit and loss. If we were to show these kinds of items in the profit and loss account, think about it. 100 crore revenue. 90 crore of expenses. We also include this capital work in progress. Now this is a very big company. It is generating crores of revenue. So how much amount you expect it to be spending on a building? It may be spending say 20 crores on the building. Now if we include this 20 crore, we have moved on to a loss of 10 crore. We were generating a profit of 10 crore, but now it shows a loss of 10 crore. So we would not show this 20 crore in the statement of profit and loss because it does not pertain to any particular year. The income statement, the statement of profit and loss, it is prepared for a particular year. But this building that we are building, we are going to get benefits out of it over multiple years. So why put all the expense in 1 year? So that's why we show it in the balance sheet, non-current asset, capital work in progress. Answer is going to be option number E. So now here's another question. Which of the following items in the balance sheet of a company are correctly matched with the head in which they will be shown? So we have discussed all the basic aspects about the balance sheet. So now I would like you to answer this particular question. If your concepts are clear, if you have understood everything till now, you would be able to easily answer this particular question. Goodwill, current asset. Trade receivable, non-current asset. Securities premium, reserves and surplus. Debentures, current liability, or none of the above. So now let's try to answer this particular question. So we are talking about 4 items in the balance sheet. They are goodwill, trade receivable, securities premium, and debentures. So whenever we talk about balance sheet, the thing I like to do is to divide it into 2. The balance sheet, it has 2 parts. One is the assets part and another is the equity and the liabilities part. And further, we classify assets as non-current assets and current assets. And here also we have different headings. We have shareholder fund, we have non-current liability, we have current liability. Here also we have different sets of headings. Now, first let's talk about goodwill. Now, goodwill, it's kind of a reputation that the company has in the market. Goodwill is an asset for the company. If you have some goodwill, it is definitely going to be your asset. So it is an intangible asset. It is not something which is going to be converted into cash easily within a period of 12 months. So we are going to show it under the non-current assets. Now it says that it is an intangible asset. Now assets may be tangible or intangible. Tangible means you can touch it. Suppose I have this particular mobile phone with me. I can touch it. It is what? It is tangible. Now everything that I can touch is going to be my tangible asset. I can touch my car, I can touch my machinery, but there are some things which I cannot touch. For example, goodwill, it cannot be touched. So it is an intangible asset. Then our trade receivable. What are trade receivables? You have sold some goods on credit. Now you are going to receive this particular money in a few days time. So they are sort of debtors for you and you are going to easily get the money within a short span of time, less than 12 months. So this is going to be your current asset. Now then is securities premium. Now let's try to understand what is securities premium. Now sometimes what happens is company, it comes up with a issue, company issues share. We already know now what the situation is. The share is actually worth rupees 10. The face value of the share is rupees 10, but the company is issuing it at rupees 100 or even more than it. The issue price is rupees 100. Now the company is collecting 90 rupees more on this particular share. Now this 90 rupees is referred to as the security premium. Share is a kind of a security and we are collecting premium. So that's why it is shown as a securities premium. So it is kind of a reserve. It is kind of a reserve and surplus item. It is kind of the extra amount that the company has received, and this extra amount, all the incomes that the company receives, all the gains, all the reserves that the company possesses ultimately belong to the shareholder. They are sort of a liability for the company. They are shown along with the equity head. So along with the equity, we are going to show reserves and surplus as well, and the securities premium is a reserves and surplus item. Then there are debenture. Now this debenture, what it is? It is a long-term debt instrument. Now the debenture, you can understand it as a debt. Now the company, it may issue shares to the shareholders, or alternatively, it may obtain money from the market by issuing debentures. Now debentures, they are sort of a debt instrument on which the company will be obligated to pay interest every now and then. The interest is going to be paid, say, on an annual basis on the debentures. So it is a kind of a liability for the company. It is a long-term liability for the company. Debentures are going to be issued for a long tenure. It may be 10 years, 15 years, or even more than that. So debenture is going to be a non-current liability for the company. So now we know what is going to be the treatment of all these 4 items which have been mentioned here. So now we can easily answer this particular question that the thing which is mentioned correctly, the thing which is matched correctly here is only securities premium which is matched with the reserve and surplus. Goodwill would come under non-current asset, trade receivable under current asset, security premium is correct, debenture is non-current liability. So the only correct matching here is of the securities premium which is shown under the reserves and surplus. So thank you friends, this is all about today's discussion on the financial statements of the company. I believe you were able to understand each and everything that we discussed today. If you were able to understand each and everything, do tell us about in the comment section. And if you are not able to get anything, you can also mention in the comment section. This is it for today. Thank you. Bye bye. Take care. All the best.